Kevin O'Leary is best known from the TV show Shark Tank. Once a crypto skeptic, he's now a raging crypto bull. The big benefit we get from following someone like Kevin O'Leary is direct access to the world of the institutional investor. And here's the thing to remember. The big money that's going to explode the crypto market higher is not going to come from the small retail investor. It's going to come from the big institutions. So in this video, we'll be looking at the institutional investor mindset and the problem they have right now allocating money to crypto. Then a great blockchain use case from one of Kevin O'Leary's biggest passions. And then we'll finish up with the big money that can skyrocket the crypto market. And it actually comes from one specific type of institutional investor. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, Kevin O'Leary explains how he tried to reallocate some cash from underperforming real estate into stablecoins to take full advantage of the big yields that we're all getting right now. And the big lesson is this: there'll be many other institutional investors trying to do the same, but they aren't yet able to get fully involved in the crypto market. Check it out.
We took down our commercial real estate holdings, including here in Boston where I am, down from 31% of the operating company's portfolio. Remember, these are income producing properties, so it was a form of our way we made income. And the cap rates got so low here in Boston, New York, Detroit, Miami. We just sold them, including, climate controlled storage facilities that we bought at 11 cap that were trading at 3.5 cap. So it was time to exit. So we sold it down to 8% holdings. The only buildings we didn't sell are illiquid or have, issues around them. They house movie theaters and things like that. And we had all this cash. So we go to the cash desk and we say, okay, we have to park this cash while we redeploy it. And they offered us 23 basis points. And I'm talking about some of the biggest cash desks in New York. And I said, this is insane. You're going to give me 23 bips? And I'm facing 2.1% inflation. That's when we started digging into stablecoin, because that was the first time we started that dialogue with Circle and other entities. And then I called up our auditors and said, look, we're going to deploy some of this cash into stablecoins. And we chose USDC because we really like the compliance team over at Circle. Those guys understand our problems regarding compliance. And the auditors said, no way, no way. You are not doing that. We're not signing the statements. I said, that's crazy. I want to deploy this capital. You won't sign my statements? No, we won't. It's not approved by the regulator. I mean, guys, we talk about crypto collectively all day long, but it is so early in the institutional world. It is so nascent. It's so not there yet. And that in itself is the giant opportunity. I mean, just stable coins alone would be a huge market if you could actually lend them out, even anything over 4%. Now, I assume when they regulate it, the demand's going to be so high, it's going to push down the yields. But right now, you're talking 6.2% on a 90-day stake, which is phenomenal, unless you wake up and the regulator changed their minds on stablecoins and USDC, which is kind of scary, which is why we can't load up. We can do, maybe 100 basis points worth of it, but we can't put 20% of a portfolio into it. I would if it was regulated. So, and I'm just one guy. Can you imagine what would happen if tomorrow morning, regulator says, okay, here are the rules for stablecoins. Here's what a stablecoin money market fund looks like. Yeah, you have to be a bank, and then Circle turns into a bank. Whatever's going to happen, I'm speculating when I say that. But the demand would be unbelievable.
So this is a typical use case of an institution right now. One asset class is underperforming, so he wanted to reallocate his cash into stablecoins to take advantage of the big yields like 5 to 10%, but it's regulation that is stopping him. And this is one example where the small retail investors like ourselves can take full advantage, as we don't have to deal with legal and compliance teams.
I think the NFT market is going to be absolutely huge, and I'm going to be a participant in it. And I'm thinking NFTs, not just on digital art. I'm thinking NFTs used to authenticate physical assets. The one I'm working on, because I'm a huge watch collector, and I know all the world's largest collectors and the CEOs of all the watch companies, is authenticating secondary market watch trading. I don't know if you saw that article last week. I think it was put out by CNBC. $20 billion a year of trading in the watch asset class. And the biggest problem, let's say I want to buy a Patek Philippe that went off the market 17 years ago, which I'm doing right now, a piece celebrating their 75th anniversary. I have to send it to a guy named John Reardon in New York to get it authenticated to know that it's real. The hassle in doing that, the cost of doing that, moving it from the seller in Hong Kong to New York City in Bond, having John look at it, open it up, make sure it's real, close it, send it back to the seller so it's in his physical hands, then do the trade. I could avoid all that with a watch NFT. Once that watch was put on the market, Reardon would do an NFT to it, approve it, certify it, and for the rest of that watch's life, and every time it trades, you know it's real. And if we have to pay back a royalty to Patek Philippe, or whoever the maker is, or the designer of the dial, that's fine. You can all do that on a smart contract. So should that be on Solana? Should that be on Ethereum? Should it be on a derivative of Ethereum? I don't know yet. That's the research I'm working on.
So the use case he points out is for product authentication and also proving ownership without the need of sending it back and forth around the world. Okay, and last up, and probably the one you've all been waiting for, this is about the big money that can really move the crypto market. Kevin O'Leary is actually flying to the Middle East to meet up with this category of investor. Curious to know who it is? Check it out.
They have not pulled the trigger yet. They're trying to get themselves set up for the moment when the regulator allows it, both in their own geography and in the US. You got to remember that those funds, those sovereign funds, whether it be in Saudi Arabia or United Arab Emirates, a huge amount of that capital is invested in the S&P 500 and derivatives thereof. Huge amounts, huge amounts. So they cannot be offside with the US regulator. They just can't. And I look at this as a huge opportunity. I speak to those guys almost every day. They would immediately go to 1% to 3% on Bitcoin alone, just Bitcoin, let alone Ethereum or any level 1, level 2s on the chain. They haven't even thought about that. They're just thinking about Bitcoin and owning that as an asset. The amount of capital that will come into this market when the regulator approves Bitcoin as an asset or a currency or a security, whatever they're going to regulate it as, is going to be unbelievable, which is why I own it. I mean, my premise, stomaching the volatility, which we all do every 12-month cycle, is the upside is behemoth. It's huge. And so, whether it be, for me, it's an asset, it's a long-term hold. The coin I own, is the coin I own. I don't trade it. I lend it. I stake it. And, I get some income from that. But when you're dealing with a multi-billion-dollar mandate, and some of these they're the largest pools of capital in the world. A 1% allocation is a tremendous amount of money. And so there's a whole bunch of people, and me included, heading over in November. And everybody is talking about not just Bitcoin anymore. It's what would a portfolio look like if, the managers are asking this of participants that are already building these portfolios. Give me an allocation of positions if I want to be exposed to Bitcoin itself, of course, but also be involved in decentralized finance and also own level 1 and level 2 chains. What does that look like?
The big money that can send the crypto market soaring is not going to come from the small retail investor. It's going to come from the big institutions. Kevin O'Leary's strong point is knowing the world of the institutional investor, being one himself. He explained his frustration as he wanted to reallocate his cash from underperforming real estate over to stablecoins to take advantage of the high yields, but was unable to because of regulation. One of his passions is designer watches, and he explained not having to fly a watch all around the world to get verified is another great use for blockchain, product authentication. And the big money that's going to find its way into crypto is from sovereign wealth funds. Some of these have trillions of dollars under management, and interestingly, the largest is in Norway. And some of the biggest are from the Middle East. Oil profits, right? And Kevin O'Leary keeps reiterating we are still so early for crypto. So there you are, guys. Hope you enjoyed. I do believe crypto is the place to be as these big institutions begin to get involved. Let me know what you think below. For now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. If you want to check out Blockfi, then see the link below. And for now, I'll see you in the next video. Bye for now.